Good morning. I'm very excited to be here and address this esteemed group. It's a pleasure to be back among our law enforcement partners from the Department of Justice, FBI, U.S. attorneys, Homeland Security, and the Treasury Department, as well as our other offices of inspectors general. It was not too long ago that I attended these conferences as a prosecutor in the fraud section at DOJ. And I thought then, as I do now, that these conferences offer a terrific opportunity for us to share presentations about the latest cases, trends and patterns, best practices, network with others, and learn about how our field continues to evolve. Some have asked me why I wanted this job as Inspector General, and it really boils down to two words: public service. I feel fortunate, and it's a privilege to have had the opportunity to serve this country and the American people for more than 25 years, and I'm proud to have dedicated my career to public service. It was nice to commemorate Public Service Recognition Week 2 weeks ago, acknowledging all the contributions that you have made in service to the American people, as well as National Police Week last week, honoring those who safeguard our rights and freedoms guaranteed by the Constitution and protect and serve our communities. And the reason that I was so attracted to this particular job as Inspector General at the FDIC is that it takes me back to my roots: financial fraud and money laundering cases. That's where I cut my teeth as a money laundering prosecutor. And I'm so glad to be back involved in these important investigations against banks, bankers, and those who seek to undermine our banking system. As you know, the FDIC supervises the majority of the banks in this country, more than 3,000 financial institutions, and ensures customer deposits of nearly $8 trillion. So it's clear that the agency plays a critical role in maintaining the stability of our financial system and in protecting the savings of millions of Americans. Also, I strongly believe in the mission of the Inspector General and the importance of independent oversight. It's a unique aspect of American democracy to be able to investigate and evaluate programs at government agencies and to do so with objectivity and fairness. Simply put, the FDIC OIG helps to preserve the integrity of the nation's banking system. It's a way to give back, to make a difference, and have an impact. Also, this is a time of new frontiers for our Office of Inspector General. Coincidentally, on today's date, May 20th, in 1927, Charles Lindbergh flew the Spirit of St. Louis airplane across the Atlantic from New York to Paris. And also on this date, the Hubble Space Telescope captured its first photographs from space in 1990. In many ways, the work of the FDIC OIG is similarly exploring new frontiers. The abiding theme of our efforts in the OIG is forward-looking and proactive, aiming to position the office not just for what we see today, but also what we seek on the horizon. By way of background, within our Office of Inspector General, the Investigations Division is a nationwide program of about 70 people, including 60-plus special agents, 1811s, with full federal law enforcement authorities. We have 7 field offices around the country, an electronic crimes unit, and an operations group. And I'm proud to say that our investigators are very experienced in federal law enforcement and are trained in finance, accounting, and auditing. They have specialized knowledge and familiarity with banks and bank and financial records and tracing funds. They also have unmatched expertise in putting together document-intensive white-collar criminal cases. OIG agents investigate complex and sophisticated crimes against banks, including a wide range of cases such as bank fraud, embezzlement, money laundering, cybercrime, and currency manipulation violations. These cases often involve defendants who are directors, executives, and officers at banks, as well as CEOs, presidents, attorneys, real estate insiders, and financiers who defraud the banks. In addition, we have broad jurisdiction in financial cases, virtually any criminal conduct affecting the safety and soundness of a depository institution insured by the FDIC. Over the past 5 fiscal years, our investigations led to about 450 charges, more than 400 convictions, and $4 billion in fines, penalties, forfeiture, and restitution ordered. In the last 6 months alone, our cases resulted in more than 80 indictments and informations, almost 30 convictions, and nearly $56 million in monetary recoveries. We've investigated some of the biggest financial fraud cases. You've already heard about the Catch Card case, which resulted in the conviction of a pharmaceutical executive who was defrauding a bank in Puerto Rico to the tune of $100 million, causing the bank to fail. Also, we worked on the Wells Fargo matter, whereby bank employees engaged in improper sales practices, opening millions of accounts or products under false pretenses or without consent. The bank agreed to pay $3 billion to resolve the criminal and civil cases. And the Banamex case, where the bank agreed to forfeit nearly $100 million for criminal violations related to failing to maintain an effective anti-money laundering program. In this case, the bank had issued, over a 5-year period, more than 18,000 alerts on $142 million of suspicious transactions, but only conducted fewer than 10 investigations and filed 9 suspicious activity reports. Needless to say, the work is keeping us busy, and I would be remiss if I did not take a moment to recognize and personally thank the many outstanding special agents of the FDIC OIG for all their hard work, dedication, and commitment to our office and its noble mission. Our investigators regularly coordinate and collaborate with federal, state, and local authorities such as the FBI, IRS criminal investigations, Homeland Security investigations, as well as state banking regulators and prosecutors. We partner with the U.S. Attorney's offices in numerous judicial districts throughout the country, as well as working closely with many sections at Main Justice, the Fraud Section, Money Laundering, Computer Crimes, CSIPs, and Public Integrity, as well as the Antitrust and Civil Divisions. And we also participate in many interagency task forces around the country. Indeed, about 6 months ago, we established a new Mid-Atlantic region and special agent in charge devoted to enhancing coordination with U.S. Attorney's offices in the District of Columbia, Virginia, and Maryland, as well as with the headquarters functions of our law enforcement partners and OIGs in the D.C. metropolitan area. This group is off to a very strong start in just the first few months. In short, we place an enormously high premium on our collaborative partnerships with our other law enforcement agencies, as we could not do our job without the help and support of our partners and colleagues, and you are all critical to our law enforcement successes. Also, over the past few years, we have grown significantly, hiring about 25 new 1811 agents to our investigations unit, including 4 new agents in the electronic crimes unit. Our growth also includes establishing offices in new geographic locations that have historically encountered significant financial fraud, namely South Florida and Southern and Central California. In the last few years, we have worked to develop the capabilities of our electronic crimes unit, and we have invested significantly to make sure that we have the latest cutting-edge technology to investigate financial crimes. We updated and revamped our processes of controlling and reviewing the evidence. In doing so, we have evolved beyond the traditional forensics capabilities, which focused on the analysis of digital evidence, to enhance our abilities to work on cyber criminal cases at banks, including ransomware, hacking, denial of service, and even virtual currency crimes. After all, cyber is where the banks are and are going, the future of the banking sector, and where the bad guys are exploiting. And we're doing our best to position ourselves for the future to address these kinds of crimes in the near term and in the long term. Our proactive approach seeks to harness available financial information because so much of the banking data is dollars and cents, bits and bytes, zeros and ones. Therefore, we are working to develop our data analytics capabilities to use this information in ways to identify red flag indicators of wrongdoing, spikes and aberrations in banking activities, and watch for trends and patterns. I would also like to turn to a new area of cases stemming from pandemic stimulus funding and relief efforts. As you may know, on March 27th of last year, the Coronavirus Aid, Relief, and Economic Stability Act, also known as the CARES Act, went into effect. It created the Pandemic Response Accountability Committee, the PRAC, which is a unit within the larger Council of Inspectors General on Integrity and Efficiency. And I'm proud to say that our office was invited to be a member of the PRAC. The PRAC conducts oversight of more than $5 trillion in spending for the federal government's pandemic response and recovery efforts, and the PRAC's mission is to coordinate oversight throughout the federal government, look for cross-cutting issues among pandemic relief programs, highlight common risk areas, and elevate themes that individual OIGs are finding in specific programs. Since the creation of the PRAC a little more than a year ago, the FDIC OIG, working closely with the fraud section at the Department of Justice, has opened more than 100 investigations and inquiries related to the pandemic. And during this time, our pandemic-related cases have resulted in more than 85 criminal indictments and complaints, and 18 convictions so far. Through these and other cases, the PRAC has identified several areas vulnerable to fraud. One example is the self-certification of recipient eligibility for pandemic relief funds. The typical schemes involve fraudulent applications for Paycheck Protection Program, PPP loans, and Economic Injury Disaster loans, EIDL loans, involving false identities, false information about small businesses, its existence, and its employees. This self-certification has led to substantial risk of fraud to the programs themselves and the banks involved. The CARES Act intended these funds to go to those most in financial need during the pandemic, small businesses to fund payroll, mortgage payments, rent, and utilities, and to their employees. Another example of cross-cutting work by the PRAC involves the Pandemic Unemployment Assistance Program, which provides unemployment-related benefits to individuals who have been impacted by the pandemic. In these cases, the defendants often submit fraudulent applications for unemployment insurance benefits using fake Social Security numbers and employment information, and thus enriching themselves at the expense of the government and taxpayers. To further expand its support of criminal investigations, the PRAC is establishing a pandemic fraud task force comprised of special agents from member OIGs and other law enforcement partners. The PRAC Fraud Task Force will take advantage of the collective skills and talents for many law enforcement organizations, as well as the jurisdictional reach of the PRAC. This collaborative model will result in greater efficiency of enforcement efforts through streamlined investigations and prosecutions. Also, to facilitate the identification of fraud across the pandemic relief funding streams, the PRAC has established a Pandemic Analytics Center for Excellence, PACE. The PACE is aggregating both public and non-public data into a centralized clearinghouse for analysis by data scientists and subject matter experts using cutting-edge tools and software. In doing so, we hope to provide investigative intelligence to the law enforcement and OIG communities. In addition, the PRAC has established a subcommittee on the oversight of financial services, which has held a series of listening forums highlighting the perspectives of lenders, small businesses, borrowers, and housing stakeholders. These discussions brought together experts to collect and gather information and feedback about the federal government's pandemic response efforts and to identify areas for further oversight. The PRAC also shares best practices with federal, state, and local partners. Since the creation of the PRAC, inspectors general have issued more than 150 pandemic oversight reports related to the distribution of the CARES Act money. Further, the PRAC has established a website, pandemicoversight.gov, to track expenditures for the trillions of dollars in relief funds and to create transparency and visibility for the American people to know where their taxpayer funds are being allocated. So in sum, these are just a few of the things that we are working on and our planned initiatives and innovation for the future of our office: electronic crimes at banks, data analytics, and pandemic-related financial crimes. Our OIG has truly evolved to become a leader in the area of financial fraud enforcement, and our vision is to continue building upon prior successes by bringing important and significant cases in collaboration with our law enforcement partners and helping to maintain the integrity of our banking sector. In short, we're taking it to the next level. Thank you for your attention and for allowing me to share our perspective with you today.